There are many ways to fuel innovation for large companies. Corporate venturing is one of them. But how do we know what is a good investment opportunity? And how can we leverage the full potential of these? We discussed the topic with Yoram Wijngarde, founder and CEO of Dealroom, and James Mawson, editor-in-chief, Global Corporate Venture.
Okay, so thanks to Yoram and Jim for joining us for this to discuss corporate venture capital. Really glad to have you. So I'm going to start, given the current situation with the global economies and the energy sector being very hard hit. Have you seen signs already, or do you see that there may be a shortage of capital coming, for early stage companies? I think on this one, I'll let you start, Jim, and then pass it on.
Sure. Well, thanks very much. It's a great pleasure to be here. And I think what we've noticed, and this was really interesting and quite surprising, was that if you take the broader view of how corporations invest in startups, we were expecting the COVID-19 crisis to actually have an impact, partly in terms of the volume of deals that they were doing, but also in terms of the value of the rounds that they were involved in, particularly in the oil and gas sector, given that there was a double whammy. Not just was that there was a crisis around people's healthcare and people being able to work, but also there was a significant drop in the oil price. But actually what we found was that the drop-off wasn't as severe as could be expected. And in many ways, we found corporations have been looking to innovation as growth as part of the route out of the crisis, whether in the oil and gas sector, investing in clean tech and in other areas, or more broadly across and around the world in different sectors. So that was a little bit of a surprise. How long it lasts, we don't know. It's still a degree of uncertainty about the longer term economic impact. But certainly for the shorter term, we haven't seen the environment hit as hard as perhaps we feared.
Yoram, what's your take on the situation?
Yeah, somewhat similar. So let's say of early stage capital, 2/3, roughly speaking, comes from VC firms, 1/3 from corporate venturing. And I totally agree that back in April, things look really scary, and the expectation was we would see fewer deals, smaller deals, etc., and it hasn't really happened. I mean, it has happened maybe to some extent in certain areas. There's been a bit of a flight to quality. There are definitely some corporates out there that simply are not able to commit anymore in the way that they could before, just because they have to. But that's only in really specific sectors, and across the board, like the risk appetite to invest in innovative companies has not shrunk at all.
So Jim, you alluded to my next question. What key areas and what technologies are energy corporate ventures particularly looking for these days?
It's a really great question, and this comes in the wake of BP announcing $4 billion that they're investing, particularly in clean tech, and a reduction of what they're focusing in terms of the amount of money or amount of production they're expecting from the traditional oil and gas sector. So we are seeing a large and rapid shift in terms of the oil and gas or energy companies' focus areas. If we roll the clock back to 2014, the largest area of corporate venturing investment from the energy companies was in their core oil and gas operations. That has more than dropped by 3/4 over the past 5 or 6 years. And in fact, they've reinvested their sort of appetite in technology and working with startups in different areas. Obviously, clean tech has been growing. We've seen areas of focus around IT more generally, transport and mobility as they move beyond the core exploration and production down into distribution and use into other areas and other sectors. We've seen focus in biotech also start to re-emerge, as well as advanced materials in some limited form. But I think some of the areas we will also expect to see some engagement will be around some of the automation and robotics. So if you think about it, I think there's a number of areas they're looking to. Obviously, they need to make their core production as efficient and cost effective as possible. And that will remain, certainly if the oil price remains low. But the sort of distribution or use of the energy, how they source that energy, whether it's from solar, from wind, from other sources, maybe even nuclear, and the uses of it to turn it into electricity that can then drive cars, will also mean that they will create different opportunities around, say, fuel or car charging. And the electrification of cars means that the sort of traditional fuel pumps that, say, a Chevron or Shell or BP have used, well, actually, they have to think about the sort of electric charge points. So I think in a whole host of areas, the entire business model of the traditional energy companies is up for review. And I think BP is very much, as along with others such as Total, Shell, and a whole host of the other main energy companies, are looking again at their entire business model and what needs to be changed. And corporate venturing is very much one of the tools that they're looking for to make that transition happen.
I'll pass it on to you, Yoram, on this one too.
Yeah, definitely. So I think on the one hand, people are interested in technologies. The question is about what technologies. So yeah, there is electronic vehicles, hydrogen storage, carbon capture, smart grid. There's definitely that, but I think the more forward-looking corporates are more going to look into the distribution side of things, and maybe less on the technology side. So I think that's a big shift that's happening now. It's like in the old days, being an energy company was all about having, or your sourcing, let's say, and striking deals with governments and this kind of things. Whereas like in a more sustainable world, the energy itself is a commodity, and it's really more about providing services and about distribution and about creating platforms that consumers love.
Thanks so much. I'll follow up with another question with you, Yoram, and then pass it on to Jim again. So I know you look at your company, Dealroom, looks at a lot of different industries. And if you were to compare the risk, the willingness to take risk, or the risk averseness of the energy business compared to many other industries, how would you define it? Are they willing to, jump at new things and try new technologies, or would you say they're even maybe slow to change?
I think there is never enough risk appetite, almost, I would say, for large corporates in terms of VC. I think most corporate VCs still don't fully understand what venture capital actually is. I mean, the people who work in that team do, but not really on a corporate-wide level. It's about really going for moonshots and investing in incredible products that have a demand and an ability to scale globally. And if you look at how many successful corporate venturing deals there have been in the energy space, there's actually really very few. I mean, there are some that have done okay, but they've also really missed the boat on all of the biggest opportunities. I think Uber and all these mobility platforms, there should have been energy corporates in at least some of those, because it's really going to transform how it will really transform their own business.
Thank you. How do you see the risk willingness or risk
adversity? Yes, well, it's a great question. I suppose in some ways there's two types of thing. I think Yoram, obviously, given the sort of power and insights that Dealroom brings, is spot on. I think there's a lot of corporations which are good at the sort of more incremental. They have a business unit, they identify their roadmap, their needs, and then they find the startups that maybe complement it. And maybe it takes a little bit of time to work through some of the pilot once you provide some of the equity capital, or vice versa. But some of those real moonshots or far-reaching technologies that, if they come off, think about nuclear fusion, for example, would be very transformative. And also, I think there's a great sort of phrase, which is always slowly, then suddenly. And particularly when you think around sort of big disruptive trends that affect industries. If you roll back the clock 20 years ago, a lot of the big oil and gas companies were interested in hydrogen. They looked at it, they spent even hundreds of millions of dollars investing in it, they explored some work with startups, but it was still too early. They hadn't necessarily understood the changes to the business model that it would require. There wasn't necessarily the support from governments and societies to enable it. And I think you've always got to remember that sometimes just having the best technology or something which could be potentially transformative, do you have enough time or enough roadmap for that to transition? And I think, it doesn't necessarily always be important to be the first, as long as you're the most successful. There were many search engines before Google, but Google captured the market. And I think there's still that opportunity to understand when those changes happen, how do you do it? And I think that really comes back to thinking about three things in terms of, if you're a corporate venturer, understanding your risk tolerance, your risk aversion, but also understanding just that sort of likelihood of how it will land within inside the current corporate culture, the not invented here syndrome, as well as understanding what the societal or likelihood that technology will be demanded by people. And I think hydrogen in this example is probably a good one. 20 years ago, a lot of money was spent, didn't really go anywhere. Now, if you listen to what the European Commission is talking about, if you listen to what some of the startups are talking about, you're getting that potential opportunity for those stars to align and all parts of the value chain to suddenly say, yes, we can do it. In which case, then it comes down to who could do it most effectively and most efficiently. So I think there's some great opportunities out there, but still having that idea of the basics of venture capital, which is team, which is understanding the time and understanding the potential impact if it can happen. And understanding that it's a very difficult thing to do. It's not easy. And certainly I wouldn't criticize people for what efforts they have done. I think there's just the opportunity to look ahead and perhaps do it more and more effectively, just as Yoram says.
Very interesting to hear how, what makes for a successful investment as well, that it's not just the idea you're investing into. So following up on the next question, I wanted to both look at this historically, but also if you were to look into the glass bowl, how important are the investments made by the corporate venture capital, the part of those companies? And I think, Yoram, you kind of touched on it, but both historically and going forward, if you were to predict. Do you want to start on that one, Yoram?
Yeah, happy to. Yeah, I think in terms of early stage investing by energy corporates, it's not yet at the level where it needs to be. So if you compare how much they put into venture capital with overall R&D, it's like a fraction. It almost doesn't even count. And that really shows, like, definitely not to criticize anyone's efforts, but I think from the top down, there needs to be a big increase in activity in order to really have a proper seat at the table. Like, this sector has so much capital, and I think it should be directed also more towards distribution and build platforms that generate new demand from a sustainable source, and they're like perfectly positioned to do that. So I think there's still a lot of steps to be made.
So they could be more aggressive and more bold. What's your take on this, Jim?
Yeah, thanks, Sam. I think Yoram's spot on. I think there's a really interesting view about where some of the technologies are coming from and how long it takes. If you think around the battery, if you think around particularly the energy sector, the sort of decades that often it takes, it's a hard thing to do. And if you roll the clock back perhaps to one of the first clean tech boom leading up to 2007, 2008, a lot of VCs invested in it on the assumption that the time scale would be more like software. But actually it didn't happen like that, and a lot of VCs have flowed out of that sector. So if you look at the actual activity, particularly around the clean tech space, particularly around things which are more patent intensive, there was a great academic article by Mark Schultz, which looked at the sort of decline in venture activity in patent intensive industries, particularly in the US. And what's actually sort of reversed it or made up for it is corporations and other more strategic investors say, we need to do this. We need to understand both the early stage as well as the later stage, more mature stage, if this is going to happen. So I think their sort of risk appetite, or the ability of corporations, along with governments, along with other more strategic investors such as universities and research institutions, to engage in this sector has probably never been higher. And I think that's probably one of the most optimistic signs, is that sometimes people lose sight of the fact that some of the VCs who weren't necessarily in it for the longer term because they don't have the 10-year cycle to do that, and some of these investments will take 20 years to prove out, but actually a lot can happen in that regard. So I think the sort of strategic trump in financial, but you need to make sure that financial is there and in place for the longer term. And that's one of the things I've been most excited about, is the fact that energy corporate venturing units didn't retreat, even though on the whole, even though there was the sort of both the double shock of COVID-19 and the lower oil price at the start of the year. In fact, many of them kept on supporting portfolio companies, and some were still looking for new deals. So I think that's a sort of very positive sign. Could more happen? I totally agree with Yoram. They could be more ambitious. They could do more in this space. But I think the sort of signals of groups like a Shell or BP putting out hundreds of millions of dollars per year in venture capital puts each of these units as one of the largest VCs in any given cycle. If you think about a VC maybe raising a fund every 3 years, they reserve half their capital for follow-on deals. So in any given year, anyone who raises more than 500 million will be considered a last VC firm. If you look at most of the big corporate venturing units, they're able to put out 100, 200, or even more per year in deals. And I think that level of activity is perhaps underplayed just because their fundraising cycles aren't the same. They don't have to raise a fund that can last 3 to 10 years. They can raise each year from the balance sheet and the reserves that people do. And so I think I'm actually sort of very optimistic in that regard. I think the appetite is there. The energy sector is looking for change. And I think they will be increasingly important, because ultimately, if the startup is going to transition from being a startup to being a scale up, something that's actually going to have the impact that society got, I think what we'll need to do is have this idea of how do you support the entrepreneur in that journey. They need capital, but they also need customers. They need product development. They need to hire the right people, and they need to think about eventually an exit. And I think beyond just the venture capital piece, corporations can play a role in those other areas. And if you think about the talent set that corporations can bring in the energy, they're very good at physics, they're very good at the chemistry side, but they've not necessarily hired and recruited a lot of people historically from more of an engineering, in terms of IT engineering background. And I think that transition of talent from startup to large corporation and vice versa, from people who can know how to execute and understand the fundamentals of the physics and chemistry, will be significantly important. And it's that collaboration or partnership is beyond just the VC. The VC gets things started, but to get things scale, you need to have a collaboration.
Great, thanks for that. I'll start with Yoram on the next question. So looking in the other end, opportunities, investment opportunities for corporate ventures and others, has that been affected? Does it look different pre-COVID and today? Has innovation gone down, the activity and the risk willingness in that end?
Do you mean like from the entrepreneurial side?
Yes.
Yeah. No, I don't think so. Definitely not. I mean, there has been maybe an initial shock where people became a bit more conservative, but that has evaporated already. And it's maybe sounds like a cliche almost to say, but disruption is where opportunity also arises, and I think entrepreneurs are definitely seeing that, and there are so many levels where it's become actually the best time ever to be an entrepreneur. For example, because of distributed teams, it's now more accepted to go to lower cost places. So you don't, as a startup, you don't have to be anymore in London or in Berlin or in Paris. You see now startups being built from all over Europe, really. So that's one thing. It's become a bit easier to hire because some traditional sectors have had to reduce staff, and that's an opportunity if you're an entrepreneur, because you can find talent more easily. There is a lot of talent already in Europe, because now for the last 20 years we've kind of built up a tech ecosystem. There are a lot of people now with operation experience and having experience to get from startup to scale up and making an impact. There is enough capital, like venture capital. There is more dry powder on the venture capital side than ever before. And as we said before, like corporate venturing is also still actually increasing, especially in the energy sector. I mean, I looked it up in advance of this interview, and energy corporate venturing investing is actually still up, trending upwards, and that includes the first half of this year.
So all looking positive, and actually maybe this situation is even creating opportunities, as you're saying, and making it, if not easier, at least, making some good premises. What are your observations on that front, Jim?
Yeah, I totally agree with Yoram. I think spot on there. I think historically venture capital was pro-cyclical, so they tended to do more deals towards the end of an economic cycle and less at the end of an economic cycle, in effect during a downturn. But if you look at entrepreneurship, it almost reversed. As the economy did better, there were somewhat fewer entrepreneurs because they could find good, well-paid jobs in other businesses and other lines. And then, as people were made redundant during recessions, or as opportunities for people as they came out of university, dried up, then I think, effectively more people ended up starting companies. We all know the sort of great roll call of companies that were started during the downturn. But I think what's been interesting in this current cycle is we haven't necessarily seen a drop off so much in the venture capital investing, but we've also seen this sort of general increase of people wanting to be entrepreneurs, alongside almost a mega cycle of people coming out of university with ideas saying, we're not necessarily just going to work for a large corporation for the rest of our lives. Why should we start? Maybe we need to explore the entrepreneurship almost as a bit of a finishing school. Learn more almost than doing an MBA by trying to run your own business. I'm sure Yoram, as co-founder of Dealroom, could testify. It's a massive learning that you can get and experience. So I think there's that mega cycle of fewer opportunities in large companies to hire people. The disruption and the opportunity is out there in younger companies and smaller companies. It's a great opportunity to learn, and the amount of capital is there to provide support. So I think we're at this sort of interesting crossover point, whereas historically you saw these waves and then maybe an overall mega cycle which lasts 50 years or something like that. Now I think both of them combining, and we're seeing this increase in innovation and entrepreneurship from a bottom up. And I think the only question that remains is how quickly or how far do those scale up? How much do they become the equivalent of a Tesla or a SpaceX? Or does something like tokamak, which is nuclear fusion, or how does some of this sort of blue or grey hydrogen startups, do they actually scale up and become the next champions? Or are they ultimately acquired, which then feeds back capital and innovation back to the base of the cycle again? So I just think it's a really fascinating time at the moment. And, I definitely think the energy sector is at the heart of it.
Very exciting and very positive perspective as well. So we're approaching the end of what's been a really interesting conversation. And I'm going to ask a question which is probably, I'm challenging you to generalize, and it's probably not that easy to give the answer. We talked about what it takes to go from a startup to a scale up, what the corporate ventures can contribute to make these successes, these investments. For an energy corporate venture, If I represented one of those companies and you were to tell me these are the 3 traits, the 3 characteristics you should look for to be as certain as you can that this is a good investment, what would your answer be? Yoram first.
Yeah, happy to go first. So I think that the number one key characteristic of an attractive investment is that there is a strong demand for the product. And that maybe sounds obvious, but I think that this is not the mindset traditionally in the energy sector, because demand is being kind of taken for granted. But as I said in the beginning, we're entering now kind of a new phase where the supply side is more commoditized. There will be new technologies used, but they will be, for the most part, available to everyone. So it's about creating services and platforms that people love, and that's the number one trait. So you need to look for products that are in strong demand, and that have the ability to grow fast. So that's the number one. Number 2 is having a strong management team. So that's a judgment call, but to be able to actually manage all that growth, you need a fantastic team that can hire also brilliant people. And then I would say thirdly, the ability to create moat, as they say, so which means having a defensible business, something that isn't easily replicable once you've been able to scale it, that you can also sustain it.
Great. So you have to have a customer, some great people running the business, and be unique in a way. How about you, Jim? What are your top 3?
Yeah, super smart answer from Yoram there. I mean, it's hard to think of anything. I think those are the sort of first order priorities, and I definitely think it's right for corporate venturers to concentrate on that sort of demand side, understanding the sort of management and understanding the defensibility of it. So I would definitely think those are the top ones to go for. If I think then perhaps second order below that, I think there's things around understanding perhaps some of the sort of broader sort of almost geopolitical situation. If you talk to most of the oil and gas companies maybe 10 years ago, they had a general view that society was going to order a certain way. The sort of the politics side of things, of how the companies go into different countries or different sectors, particularly ones which really affect everyone, like energy or healthcare, then I think that's going to be increasingly challenged in this decade. So I think being able to understand, what the implications are, or how do you provide the security or support to an entrepreneur in those situations, will be a factor, particularly in the energy industry. With the likelihood of China being able to run nuclear power plants, in parts of Europe, I think are harder now than perhaps they were 10 years ago. And why is that? Nothing to do with the sort of the startups, nothing to do with the overall sort of need for energy. It's to do with sort of factors of concerns about what the technology might lead to. So I definitely think that's one of the issues. I think just being able to understand more broadly, as a sort of corollary to that, the sort of the impact, what are you doing and what is the impact of people, not just now, but longer term? I think perhaps historically there's been a short-termism driven by financial investors or financial shareholders in the large corporations to kind of almost avoid the externalities of, say, carbon release. But I think now the work that's being done at Harvard Business School in terms of understanding the accounting metrics to be able to understand things around the sustainable development goals, I think will be important, and particularly in the energy, you just don't want to be on the wrong side of society, really. So I think it's a sort of a related part of that first question. And then I think the third piece to always remember is just the time scale. What's your moonshots that maybe if they happen could be important? What's the stuff that you could do perhaps nearer term? And how does it reflect and meet the fact that your own business units are working on their own things? And that's never easy. And there is no natural answer to it. It's just a constantly moving and shaping goal depending on corporate strategic priorities, people, and what the entrepreneur wants to achieve. If she wants to do something, how do you support her, even if it's no longer strategic? And I think those are some of the sort of second order things that I think are going to be increasingly important.
Very interesting. So understanding about society, understanding about value choices, understanding about politics and geopolitics. Thank you so much to both you, Jim and Yoram, for sharing really interesting perspectives. And it's great that we can be optimistic about this going forward. And I'm sure hopefully we'll see a lot of game-changing technologies and smart solutions coming out of this. Thank you so much for joining us.
Well, and let me just say thank you to you for organising this. I know it's been a big challenge. You do this every 2 years and then suddenly not being able to hold it live, but well done on the organisation and technology to bring this together. So thank you for the invitation.
Thank you. And hopefully we can be together in not too long time.
Absolutely. Yeah.
Thanks.
Thanks.
Bye-bye.
Thank you.